Welcome to Northwest Arkansas Investing Podcast, your go-to source for real estate investing in Northwest Arkansas.
Whether you're a seasoned investor just starting out, we bring you expert insights, market trends, and practical strategies to help you build wealth through real estate.
From buying and selling to property management and long-term investment planning, we cover it all so you can make smart, informed decisions in this fast-growing market. Let's dive in.
Welcome to Northwest Arkansas Investing Podcast. We have Chris Harlin in here with us. He is the chairman and CEO of Century Bank of the Ozarks. They have locations here in Northwest Arkansas, and we're really excited to have you to the show, Chris. Thank you. I heard you got warmed up this morning with Bo Mattingly over down in Fayetteville talking. Were you talking sports or was it?
We talked a little sports, and he's kind of involved a little bit too with knows some of same folks I know over in Mountain Home at Big Creek Country Club, and we were involved in that and still are a little bit on the fringes of that. So we were talking a little about that. So, yeah. A little golf, a little sports, everybody's excited for the season coming up tomorrow.
Yep.
So
Yeah, thanks for coming on. We appreciate your time. I know it's valuable, so we're excited to get into it with you.
Yeah. Let's just start here. Let's give us a quick, doesn't have to be anything crazy, but a 30,000 foot perspective of Century Bank, how that got started. I see there's 130 years of history here. So that's something I definitely want to highlight. If you can just give us an overview of Century Bank, how it came to be, where you guys are now, just kind of a quick timeline and where you are in the bank.
Well, I can take 131 years. It won't take more than a year or two. We can go through it. So 18, small town right on the Arkansas-Missouri border, Gainesville. For, Arkansas folks, if you know where Mountain Home is, it's 24 miles north of Mountain Home, just directly north of Mountain Home. And Mountain Home is kind of the hub for that area. Most of the folks in and around Gainesville that don't work at the school, the bank, a few places around, a lot of those people work in Mountain Home at different factories and so forth. So Mountain Home is, I always say, those of us in tiny towns, we tend to have a secondary hometown. And it's, if you're, in Goshen or whatever, you live in Goshen, your Fayetteville is your secondary.
Right.
Ozarks, Missouri, Springfield is, and in our case, Gainesville. Mountain Home was kind of that secondary hometown. So, we all spend a lot of time there. The movies are there, doctors are there, hospitals there, whatever. So,
is that primarily where you are? Is that?
I'm probably Gainesville more than anything, but in Mountain Home 4 days a week for different things, not just the bank.
Right.
My wife, for instance, is probably in Mountain Home 5 to 6 days a week doing something. So
right.
But anyway, so 1894, this little tiny town, post-Civil War, those kind of things. A lot of folks that settled all over the Ozarks had come from Kentucky, Tennessee border, and my family had come over a few years prior to that. And I think at some point, I guess my great grandfather had died, and his oldest son, and he had left 8 boys, ranging from like 1 to 16 or something.
Wow.
And the oldest went to West Plains, Missouri, worked in a bank, and to help pay for things.
Right.
And eventually came back home, and that's what he wanted to do, was be in the banking business. There was a need for that. And started this bank with his brother and another man who was a relative.
Right.
But Jim Harlin, Tan Harlin, those are the 2 oldest brothers of this group. And another man started this Bank of Gainesville. That's what it was called, July of 1894.
Wow.
And on the square in Gainesville. And went through that for a number of years. Interesting story. And we have all the original ledgers, which is kind of interesting. Found the original minute book, all that. Wow. One of the funny things about that original minute book. But, like now we have board meetings are on the second Thursday of the month.
Yeah.
Whatever. This one said the board meetings will be held on the Monday after the first full moon. Like, really? Are we
Doing time differently? Yeah.
So that was going on. They, for a short period of time, and I don't know the story on this. I'd love to. I'll never will.
Yeah.
It's not in the minutes. But they sold the bank back in 1901 for a period of weeks and then bought it back. And I'd love to know the story on that.
Yeah.
Why were you trying to get rid of a shareholder? Did you have this little plan?
Right.
But
That's interesting.
anyway, they did that. And then in 1907, 1908, in that range, they went to West Plains, started another bank.
Yeah.
And my great-grandfather came in to the bank, and that's kind of where it came into my lineage.
Okay.
So 1908, John C. Harlin, my great-grandfather, came into the picture.
Right.
He had done some things as a young man in the county politically. Not long after that, too, besides working at the bank, he kind of wanted to be in politics.
Right.
So he ran for the state senate, state house later, back and forth on that. And so he kind of was in the banking world as well as the political scene in the state.
Right.
For a long time. Was kind of an amazing guy, I guess. Did a lot for that area.
Yeah.
While he was in the state legislature, roads, of course, were terrible. Helped bring roads. He helped bring electricity into that area. The dams that are on the Arkansas side, he was kind of a force because they had both leaders on both sides of the line.
This is your great-grandfather.
My great-grandfather,
Great-grandfather.
John C. Harlin.
Okay. Yeah.
Was one of the leaders helped bring that helped bring the Bull Shoals Dam.
Okay.
And Norfolk Dam.
Wow.
For those two lakes over there. I kind of knew that, but I had a historian there in Mountain Home send me some information about that they had from the 30s about Norfolk Dam, and they had this meeting, and they had all these leaders, the governor of Arkansas, leaders in Arkansas, across the state line, brought him in, and all these leaders were talking about this dam project. Well, they meant DAM, but people didn't want to say that out loud, but they could, and it was kind of a little joke because they could say it.
The dam project. Yeah. That's funny. Let me ask you a question. The logo on the shirt. When does that come, timeline-wise, when did that come into play? Is that around the early,
No. So Bank of Gainesville was, Bank of Gainesville was what it was.
Okay.
My great-grandfather there in 08, he died in 1955. My grandfather came in there in the 30s as he came of age. My dad in the 70s came back in the 60s and then became president of the bank in the 70s.
Yeah.
In the 90s, mid-90s, we purchased a bank in a town about 30 miles north of us.
Okay.
In Ava, Missouri. And so then it became Bank of Gainesville was a problem because you want to, all these banks, whether it's a town or whether it's a region or whatever. In other words, if we got out of the Ozarks, of the Ozarks would be an issue. So we changed the name from Bank of Gainesville to Century Bank.
Okay.
At the time, we were trying to come up with a name, and we were around 100. We turned 100 years old in 1994, the year prior to the name change. So Century was a thing. Yeah. My wife actually was, I think, the one that came up with the name Century. And my dad said, "Oh, is that because we're 100 years old?" And we were in our 20s at the time.
Yeah.
She said, No, that's because everybody around here is so old. So anyway,
that's hilarious.
But Century Bank of the Ozarks.
Yeah.
Where we couldn't just be Century Bank because there was already a name.
Well, take me into the actual water, the actual, what is that? What am I blanking? What is the actual logo called? It's like the Heritage Mill. The mill.
The mill. It's like a mill wheel. So
Okay.
there are
sorry, I blanked.
Ozark County, Missouri, again, just north of. Well, this isn't just true of Ozark County, but
Yeah.
all through the Ozarks, there's a lot of grist mills.
Yeah.
And, there's some over here.
Yeah.
And so there are 4 or 5 mills in Ozark County that are historic.
Yeah.
One of them, Hodson Mill, for instance, is one of the most photographed mills in the world. I guess.
Yeah.
Rock Bridge and so on. So that's kind of become the theme.
Yep.
Look for that specific area.
Right.
And that's where we came up with the mill logo.
Looks great.
We even have one. We had one built outside the main base building. If you look at the website or whatever, it's kind of front and center.
Yeah.
And the headquarters there.
That's amazing. Brian, I'd like to get into a little bit. So I underlined still privately held and independently operated. And I think that's big. A lot of people listening to this podcast, I think generally the general population of people don't really know banking terms, what things mean. They just kind of know, if you need money for a house, go to a bank, or if you need money for multifamily, go to a bank. Why does that separate you guys being still private? Because so many banks are not per se. Can you just walk us a little bit into why that's a benefit for?
Well, it's probably a couple of things. How many banks out here? Well, let me back up. When I started in banking in 1990, there were 12,000 banks in the country, and I think several hundred banks in the state of Arkansas. There were 600 banks in the state of Missouri. Today, that 12,000 in the country is around 5,000. State of Missouri has gone from 600 to around 200. Arkansas is down to 80 or so.
Yeah.
So all these changes, name changes, you wake up, get a letter in the mail, the name of your bank, or your bank is now owned by somebody else.
Yeah.
Those kind of things. So that consistency is important.
Yeah.
Just also there's a small group of people who you can get decisions from quickly.
Yeah.
It's not going to committee after committee after committee to get decisions made. You can talk to the CEO if you want.
Yeah.
Those are the kind of things that a community bank offers.
Brian, talk on how important that is for getting quick decisions made, knowing that I think with a privately held bank, it gets better and better the more time is spent with that bank. And so someone, like let's say you and a group are investing in a lot of multifamily, I know you guys do. What's the benefit of knowing hey, I know they're going to give me a response. We can go back and forth pretty quick, as opposed to I've of course been in it. You've been in it where it's we'll have a decision next Thursday, and then it's got to go to this department, and to walk us through how awesome that is.
Yeah, I think it's important, especially right now. It feels like it's really hard to get a deal done. I feel like I'm having to look at 100 deals to get one deal done.
Yeah.
Before 5-10 years ago, I'd look at 20 and they maybe won it. So to get good feedback with that person before you start putting money in a deal is super important. To have quick and good feedback is super important. And then too, with some of those more regulated, you have a huge credit committee. Sometimes the terms change, your originator might say, hey, this is what we think we can get you. And then they go back and it's totally different than what you originally thought. So then you're scrambling and having to, find a different lender. So I think that's very
information is not having to go through a ton of different people.
Right.
It's pretty direct. And I think as speaking more so to our audience, on your side, when you get somebody that you start building a relationship with, I'm going to guess it gets easier the more deals are done. When I bring you something, if it's trash every time, it's going to be a little harder to get stuff done. But if I bring you this group or this guy continues to bring good products, I think those board meetings are probably a little easier. I would think.
Absolutely, and we even have situations where we've got folks that we've dealt with for a while. We'll get approvals over and above where they're at, and then it's just we're good with so and so here up to this level.
Yeah,
get after it.
Yeah, I think speaking more so to our audience now, I think there's a lot of importance from creating a relationship with a bank like Century Bank and getting to know them and not, shopping everybody out every single time. And I know there's a time and a place for that, but really there's a real point in what I've seen, even with some of the banking relationships I've made with like actually having that relationship gets you a lot further than just trying to shop every single time.
It's a negotiating tool too when you're making an offer on like, hey, my lender gave me feedback here. Like, this is what I need. Like, to be able to have that feedback from a lender too, where you're not just the person that's asking for a concession here or asking for this, like, having that rapport with a lender. That's great. You want this price, but me or anyone else is going to have to finance at these terms.
Yeah.
Unless they, buy it all cash or something like that.
And being able to tell that seller, hey, I'm banking with Century Bank and I've been doing deals with them for this long. They're local. They've been owned and operated for 130 years with privately held. I mean, that goes a long way, I think, on the seller side of things, and being like, okay, like we're not dealing with like Rocket Mortgage or something. Like it's way, way different.
Having that ready to go. Yeah, I have contingent on committee approval. I have, this bank ready to go at these terms. The same thing, like I don't do any single family investing, but I have people first time getting into real estate. I tell them, what you probably do as a realtor, get your pre-approval letter before you start making offers.
Yeah.
One, you're going to come in stronger. Two, you're going to have an idea of it'll help you actually narrow your buy box down too.
Yeah.
If you talk to the lender first. So same thing in commercial, multifamily, being able to say, yes, lender has me at these terms.
Yeah.
Because brings more strength to your conversations with seller.
Totally.
And those approvals, like you said earlier, can come so fast in this community bank. A lot of times, Alex here at the loan office here, he may say, hey, because our loan committee meets on Fridays. Well, if somebody comes in on Wednesday or Thursday, it may be different. Or Monday, hey, we need to move on this. Is there any way he can call myself?
Yeah.
Bill Triva, Chief Lending Officer. We can have a mini loan committee meeting in 10 minutes.
Yeah.
And make some decisions. If the numbers work and all that, we can make some decisions in minutes.
He's been good. I haven't done any deals with him yet, but that's because we just met at the NWA investing working event, but we looked at a couple deals together, and it's really good.
I have a client a real story of a client who got a pre-approval letter in 30 minutes from Alex. And I think it might've been a Saturday. And I think there was already a little bit of pre-work done, but you have local people that are willing to do things like that for you. I'd like to dive a little bit into, I'm just seeing a part on here. It says most likely to leave Gainesville. You returned as the chairman and CEO. Can you walk us through that little story right there?
Well, that was,
or who voted you?
You always do those things in high school, or at least we did in the 80s.
That was high school?
Yeah.
Yeah.
So, that's just one of those senior yearbook deals.
Even with hundreds of years of legacy banking, they still thought you might.
Well, because I will tell you, when you live in a tiny little town, my thought was I wanted to be in a big city.
Yeah.
I wanted to get out.
Yeah.
Which I kind of did and realized that wasn't for me, but for several reasons. But, I wanted to get out. They, all tiny little high school, everybody knew that.
Mm-hmm.
So you have all those votes, most likely to do this or whatever.
Yeah.
I was most voted. They had a most likely to leave Gainesville and never come back, and then they had most likely to never leave, and they got it 50% right on both.
Yeah.
The other guy left and never came back. The two that were voted most likely to never leave, one did and one didn't. So I wanted to get out and get to the big city.
Yeah.
And then kind of realize this isn't really.
Where's the big city for you?
I went to college for 2 years. So I graduated from high school in 1987, and I went to college for 2 years at Rockhurst University up in Kansas City.
Okay.
And then kind of realized that wasn't my world, and came back to Springfield and finished up at Missouri State.
Yeah. What got you back to chairman CEO? I mean,
So as I got back into Springfield, I worked in Boatman's Bank, which was a bank in both Missouri and Arkansas at the time, or in that late 80s, 90s.
Mm-hmm.
And why not work for the family bank at that time?
Well, I was still in college. And then as I started starting to get out of college in 90, 91, I talked to my dad a little, and he said, listen, you don't want to just come straight back to the bank. You want to go get some experience.
Yeah.
And that type of
Very
thing.
wise.
So then I worked at another bank right after college for a year, which, that might have been quicker than but he had a need. So then I came back in 93.
Wow.
I see that kind of as a common theme that, I love the legacy story. Like, I have 2 boys, 2.5 and 5 months old. So like, gets me excited hearing about this legacy and everything. I think it's a common theme, and especially in I guess in all across Arkansas, I feel like Arkansasians have a strong legacy, like pride with legacy.
Yeah.
And that's really cool to see your legacy. And I think it's why what I was going with that is a lot of these guys who are multi-general legacy, they do go off on their, like, they're not just, straight. For example, my son, maybe not straight into Wagers Capital. He goes off to another firm and then goes back and brings that experience. I've seen, with the Allens and stuff like Matt first, he didn't jump into Sage and, all the Hunt Ventures right away. He worked for actually a bank and I forget some others, but it's interesting to see that. I think that's great advice because, you can maybe get burnt out. If that's all then maybe you do want to run away because you're like thinking about what else is out there. But one, you get to see what else is out there. You bring that experience back into your family's legacy. What were they doing right? What were they doing wrong? What are things that you can improve on? Yeah. So I think that's a really good,
very wise,
choice. It obviously worked out well.
We did it, Alex, and which it wasn't like this straight plan that he would come back to the bank. That was that's probably another interesting story how that came about. But he worked after college, worked at Great Southern Bank, which is out of Springfield, but they've got an office just up the road here too, and worked there for several years. And we were actually sitting around Bull Shoals Lake 5 years ago or something on 4th of July, and I said, why don't we open up a LPO in Fayetteville, and you can make loans for Century rather than Great Southern. So that kind of came about that way. And then
this is Alex Martin.
Yeah, right.
Okay.
Yeah.
And then future son.
That kicked off the Fayetteville.
That kicked off Fayetteville. Yeah.
Okay, son-in-law. I didn't know. I was said. Okay.
Yes. Alex's son-in-law.
Okay.
Married to Abby is our first born daughter.
Wow.
Yeah.
Wow. So that 5 years ago in July.
5 years, right at 5 years ago, because we opened the LPO that's on the square at the Pryor Center there in Fayetteville in October, I believe October of 21.
Okay.
So we'd opened up the Mountain Home branch, full service branch in April or May of 21, and then opened that one.
Yeah.
Which I didn't really have a plan for that, but then we just kind of got talking about it. And he, had that experience, and he's brought a lot of that experience. It was a more formal training process.
Yeah.
Great Southern, or a larger bank, which is great.
Yeah.
Jackson Britt is future son-in-law in a few months, and he's worked at another bank, and then coming back to Century actually next week.
Is he going to be at the Fayetteville location?
He's going to work out of the Fayetteville location, credit analyst, which is kind of new. It's a new position for us. I have a full-time credit analyst. So, but those guys working, getting experience that we didn't have. We didn't have that formal training. Yeah. And to bring that in and formalize some of those things for the loan staffs has been great.
Well, speaking of 2021, this will kind of segue into a part like, how was starting the Fayetteville branch during COVID, and that what was there anything really weird that happened with starting a branch in Fayetteville during COVID? Like, was that a challenge in any way? I can imagine maybe. I mean, I guess it wasn't necessarily like people coming in and out per se, correct?
Yeah, I didn't notice that, and I guess we were kind of easing out of that at the time. And so, because that is an LPO at this time, which we're looking to the future and maybe doing something, expanding that in the near term. But, we were kind of coming out of that, and when we opened that up in October, I remember, we had the chamber was there, everybody was, ribbon cutting and all that. So I don't remember that that was that challenging at that time. Now you back up a year, it's probably been different.
Yeah, totally different.
That's great. What's so how your headquarters is in Gainesville? How big is the Fayetteville branch? Do you guys have plans on expanding that?
So Fayetteville branch, we're growing it. Right now, Alex has built a great loan portfolio there. Loan production office or loan offices don't allow for collecting deposits.
Yeah.
So, that's next on the horizon, and, that's where we want to expand the bank going forward. And so as we look towards not only expanding the loan side of the bank, but increasing the deposits, we want to do.
Yeah.
We're looking at potentially growth there by doing a full service branch at some point.
Yeah. So I guess I'm just kind of brainstorming, talking out loud. I don't want to say that the Fayetteville thing was like a whim of there was of course a bunch of thought put into that. How do you see, from your perspective as a CEO, how do you see the growth of everything happening, all the data, all the statistics, and you guys traditionally being more of, correct me if I'm wrong, more of like a rural bank type of bank, and seeing this huge growth? How do you manage or say, hey, we're going to stay this size, or we're going to grow? We're going to try to grow with the area. What's the balance there? I mean, do you try to keep growing with all the data and statistics, or do you keep it small because that's what's worked in the past? Or, I mean, what if you...
I've seen, I think in where you're going, I've seen other, like some banks are like, our development bucket is full right now. We're not looking at any development deals, but we'll start looking again, or even our multifamily development bucket is full right now. So, or hey, we're opening that back up and we're looking at this. I guess, is there a strategy on? Is that where you're going?
Yeah, the strategy behind seeing the projections and growth for this area. Is there an outlook on that for your end?
Well, we went through quite a long period, probably from the late 90s until COVID, where it was pretty low growth. It's always been a high performing bank.
Right.
But in terms of our internal numbers, banking numbers that bankers talk about, it would be customers are not going to care. As long as it's safe, customers aren't going to care about this.
Right.
But it's always been a high performing bank, but relatively low growth because the market we're in, it's great.
Yeah.
We have the best customers, best communities in the world.
Yeah.
But growth wise, and in part we had kept it that way a little bit on purpose for a variety of reasons. But during COVID, most banks, because all these deposits came flowing back into the banks, most banks' balance sheets just took a pop.
Yeah.
As did ours. So we kind of popped up and continued that for several years.
Yeah.
And so we've seen significant growth, which we've maintained.
Yeah.
Then in, let's say, 2021, we decided we want to go to Mountain Home, Fayetteville, and growth became, something we wanted to focus more on.
Okay.
we maintain the high performing part,
Mm-hmm.
but we want to also focus on growth.
That's a
Where's that growth going to come from?
Mm-hmm.
It's going to come from Mountain Home's not a large community in Fayetteville or Rogers standards,
Yeah.
but it is a larger community than we're in traditionally.
Right.
And when you start from zero, well, we didn't start from zero. We always had a presence, just not a physical presence in Baxter County.
Yeah.
So, that's where growth was going to come from. Obviously here or in Northwest Arkansas, a lot of growth possibilities or options there.
Right.
So that's kind of where we.
Well, I see you saying like you're not willing to sacrifice. The high performance is, of course, number one, but you don't want to grow and cut into that hyper. You could step on your own feet and just grow too much, and then performance is down, but you look like you're growing. You look like you're growing. Is that what I'm hearing?
Right. We actually have meetings. I've got a kind of developed a new group, some new staff that have worked in some other banks more recently that I wanted to get their perspective of what were you doing in your other, at your other job previously.
Yeah.
And, I told them, I'm not needing this bank to just skyrocket the growth.
Right.
I'd like to ramp it up. Where's that? That's going to come some from our branches in Ozark County or that type of thing. But a lot of that growth is going to come from, North Central Arkansas, Northwest Arkansas, we hope, and it is.
Yeah.
And, just ramp that growth up a little bit, continue the high performing as we can as well.
Yeah.
On the investment side, what do you like a lot right now, and what are you cautious about, I guess, or what are you more aggressive on or more conservative on? Is there something like if you get sent an office deal, are you more cautious on that than a land deal? Or, I think right before we started recording, you said it depends a lot on the relationship and who you're investing to. So maybe you're more bullish on a certain investor, or maybe it's location too. Maybe it's, we have a strong presence in Ozark, but we're not as aggressive on if it's in Nixa, Missouri, as it is if it's in Bentonville, Arkansas.
Yeah. I would say, a lot of it has to do with the borrower and their strength.
Yeah.
Obviously the collateral, the location, that type of thing. I'm not, and we do virtually any type of lending.
Okay.
A lot of land, bare land takedowns we've done, which this wouldn't apply here as much, but a lot of ag, primarily beef cattle and that type of thing. It's not crops or anything, obviously, in the Ozarks. So a lot of ag, that's been a big thing for us. Our traditional lending has been on ag. Again, beef cattle, that type of thing.
Yeah.
Ag land, ag real estate, a lot of tourism-based stuff. Of course, we've got lakes, rivers, marinas, tourist-based businesses over in that area.
Yeah.
As well. So a lot of that. Over here, we've done a lot more, some land development, but not necessarily the development piece, but the land takedown, get the land ready, and then, that may be handed off to somebody else who does the development lending. But a lot of smaller multifamily stuff here, those kind of things.
Yeah. So a listener listening into this, and I know a lot of my out-of-state investors will listen in on this podcast, and we're taking down small multifamily, single family. You would say Century Bank is a good fit for that.
Absolutely.
Yeah.
Alex especially.
Yeah.
That's kind of his forte.
Yeah.
He's done some of that personally, as well as been the lender for us. So he's kind of, he's the guy here who's got a lot of expertise in there.
Yeah.
So it's like it's the bar. It's a lot of weight on the borrower too. So I think for some of our people are new into real, you might have a strong balance sheet, but if you don't have the experience in a certain asset class, it might make sense to partner up with someone that has that experience to show to the lender. That's what I mean.
Yeah, 100%.
Yeah. So you guys started another bank, and in the process of selling that bank, I guess walk us through that process and maybe some lessons learned through that bank that you're now incorporating too.
Yeah, and it was planned to be kind of different. Very growth oriented was the plan from day one. And also because it's called Legacy Bank and Trust. It's not the Legacy Bank in Northwest Arkansas.
Yeah.
That's Legacy Bank. This is Legacy Bank and Trust. Let's call it based around Springfield, Tulsa, Dallas, Fort Worth now. But a little bit different business model. But in 2002, and the other part of that is I wanted to involve some other shareholders, because when you have a tightly held family business, it's hard to get other shareholders, or maybe you don't want to get a lot of other shareholders involved. This was a way to include some other people, and so we did that. And in 2002, I reached out to a bank consultant that I knew, and we were talking about maybe buying a little bank and starting a whole new operation that some of us would own, both personally, and Century Bank would own some of it as well.
Yeah.
So we found a little bank, and it was up in Missouri, a tiny bank, probably the smallest bank in the state. And we formed this group, bought this bank, branched to another small town, and bought another bank that was just outside of Springfield, a small bank.
Yeah.
Branched again. So now we're probably in 2007 or so.
Yeah.
That's when we did that other branch around Springfield. Downturn happened. Everybody kind of had their moments during that, 2009 to 10, 11.
Yeah.
And, but made it through that. And then in 2016, and we purchased a bank in, this is Legacy Bank and Trust, purchased a bank in Springfield. And then at the same time, and Century did this as well, became a CDFI, Community Development Financial Institution, which is a whole other discussion probably we can talk about, but growing. And as we get into 2018, 19, 20, 21, all that was happening, growing again. We built the new headquarters in Springfield and continued to grow. It expanded to Tulsa, and then bought 3 closed bank branches in Plano, North Dallas, and Fort Worth, and opened those up a couple of years ago. Then we have made a deal with Southern Bank in Little Rock that will close later
this year,
probably January.
Okay.
And so
from 2003 to basically now, you guys have gone from 30 million to 1.9 billion. And
the original bank that we purchased was 18 million, tiny bank.
Okay.
I think when you add up, we purchased an $18 million bank, a $40 million bank or so, and I think around a $90 million bank. Those 3 numbers are what we purchased.
Yes.
And that's about $2 billion now.
So in 2003, how old were you the chair?
I was 33 or 33, 34 when we started the process of forming this group to buy this bank in 2002.
What's the journey like to? I mean, because that's a big jump, and there's a lot of decisions that have to be made in between that. And I mean, we're hitting it from a very macro point. And we're just like skimming the surface of this, crazy number jump and this journey and story you could probably write a book on.
Well, and I actually, part of it's just a family book, but probably the chapter I've focused most on thinking about is this one, Legacy.
No, I've been focusing on some bigger life things right now, and I guess there's a lot of stress in between the 30 million and the 1.9 billion, and then selling it. And you formed the group acquisition. Now you're about to sell, and I guess like was all the purchases about, like, was it worth it? All the stress and everything to make that journey, because that's a journey right there.
It is, and it was worth it. Is worth it. The keys I would tell younger people wanting to do something like this is get great people. I would say the best thing we did at Legacy Bank and Trust is have a group of great people and allow them to have significant ownership as well.
Okay.
And they feel they are owners. I don't feel like owners. They're owners.
Yeah.
And they, I don't, obviously, most of those folks weren't there in 2002, 2003. The CEO came in 2004 as CFO.
Yeah.
So he's been in it a long time. But as far as being there in 2002, 2003, there was another group, my dad and a couple other folks that worked with Century that helped start it. But in terms of the last, especially 10, 15 years, I don't want to take, they ought to be sitting here talking about this, not me.
Yeah.
I can talk about the early years, and I hope I was supportive.
Right.
But they were running that show.
Yeah.
For, especially the last 10 to 15 years.
So you feel like a lot of that stress, or just with growing something like that, there's going to be stress and growth. And they were involved in that, and did you feel more of a support role in that?
Yeah, that's what I would say, especially the last 10 or so. That's been my role. The other thing with that one, and Century too, but it's in a way it's more impressive with Legacy Bank and Trust than it is with Century, just because of the size. But both Century and Legacy, I could say this about, they both are run with that same thing we talked about a minute ago with Century. We can have decisions like that. That's a $2 billion bank that we can. It's not a ship that you got to start turning it miles ahead of time.
Yeah,
we can maneuver it with a small group of people making decisions quickly. So you have all of the infrastructure and abilities that you have in a $2 billion bank, but you have the board and decision-making ability of a $50 million.
Yeah.
If you need it.
That's incredible.
That's one, besides that ownership, and hire great people, allow them to have ownership, and then be able to maneuver quickly. I think that's where larger banks, and I don't blame them. I've talked to people that were on boards of larger banks, and they're like, it's just not the same. And I say, well, it can't be. I'm not going to throw stones.
Right.
You just can't have a 5, 10, 15, $20 billion bank maneuver that way. I don't think Legacy would have if it went to be 5, 10, 15 billion.
Right.
It's just impossible.
How have you kept the culture of Century Bank with the growth? Like, how do you do that by keeping the board small and the quick decision making? Like, how do you keep that culture intact?
I think the people that are management at Century, we all have the same philosophy, work well together. The board has the same philosophy, all tracking the same direction. That's another thing. I'd say kind of my history and over 30-some years, 35 years of learning. If we're all working together and you're a lender, you're in the business, you're in the risk business.
Yeah.
You're going to have a loss here and there. That's not the deal breaker. Deal breaker is we've got to all be pulling the same direction towards the same goal. And if one person over here is building alliances against the others and trying to go a different direction against this group. And that gets fractured. That's where the problem is.
Yeah. I feel like you guys have walked this really fine, cool line of, and I don't know if there was ever fractures, but like keeping a really good group of cool people for a long period of time. Is that how it's always been?
Oh yeah, that's how it's been. I mean, there's always, if you got 60 employees or 200 employees or whatever it is, there's always going to be issues here.
It's not always roses.
But we have a fantastic staff and that the management and all that for the most part has pulled same direction, work towards those same goals and believes in it.
I love how you've kept it as very family oriented as possible. And Alex, and what was your new son-in-law's name?
Jackson.
Right? Jackson will be in Century Bank, and I think that's really cool. And I think that's something listeners, if you're listening, like it's rare to have in a bank like of your size, and being able to make quick decisions, and it's very family oriented, and you don't have to go through 20 people to get a decision on something. And to me it comes off, and from talking with Alex, as a bank that's like not going to just try to do a deal to get the deal done. Like if it sucks, you guys are probably going to tell us. It's like you're going to say, hey, this is like a terrible deal, like I wouldn't advise you doing this. And I've actually been on the golf course with Alex and heard him say, like, I probably want to do this before. So I think that's transparency and honesty with lending is the way you guys, that is the culture, it seems, is just doing the right thing.
Well, and all of our loans stay in-house. We don't sell loans. And, back during the downturn, 2009, 10, and there, 8, 9, 10, that's where not only a lot of banks got in trouble, but a lot of folks got in trouble because these mortgage brokers and so forth, they were just sign here and we'll, qualify you. Well, they weren't really qualified. They wanted to be qualified. They weren't really qualified. And that's not good. That's not good for the bank. Yeah. But the bank didn't care because they're just selling it. And it's not on the bank's books. The loan officer doesn't care because he's getting that commission and it's going. Yeah. But then the customer, if rates go up, what have you, they're going, I shouldn't have qualified with this. I can't take care of this. Yeah. So, our lenders, everybody knows this is on the bank's books. You don't want to qualify somebody who can't, be qualified. Well, so everybody's, again, pulling the same direction. Yeah.
I mean, if you're Mr. Investor listening, like if you bring something to like y'all and they say no, and you want to try to find a yes, you might really need to simmer on that no and really think about like, why did they say no? And you guys it's almost like a second line of defense. Like we might have, as the investor, underwrote the property and we're like, sounds good. And then you guys say no, and being able to ask questions, why was it a no? And I think that's something that could protect you from a downfall in the future as an investor.
Yeah, I like how you give some of your key people upside. I mean, I tell that if you want to get good people and have them stay, giving them upside potential on what they do is going to be key, and how you can grow turn. So whether that's giving them equity or ownership, or whether that's higher percent profit share, I think that's key to having a good business that continues to grow, because your people around you are incentivized to do well on anything they do, because whether they have that helps them, their equity grow, or they get more profit. So
I think I'd like to hit, as we 3-4 minutes from ending, I'd like to, as the chairman and CEO of a bank, you obviously probably have some favorite books and some favorite habits that you do. What's your favorite book all time, and then do you have a favorite book right now? Or you might not be a reader, but
my wife's the big reader in our family. I would say, tell you one I read recently that was fantastic. I'm probably a little more nonfiction guy than I like. My wife and I both like podcasts, and I'm a Rogan guy. I listened to a lot of Rogan stuff, and he had a lady. I don't know if you listen to Rogan.
I do.
He had a lady, and I'm also fascinated with the kind of CIA military stuff. So he had a lady on there, named Annie Jacobson, I believe.
Yeah.
And she's written several books, but one was called Survive, Kill, Vanish.
Okay.
And it's about kind of the history of CIA paramilitary
Wow.
world.
Yeah.
And goes back, talks about this guy, Billy Wall, who's a fascinating, guy.
Yeah. Yeah.
And that was that's probably the
best.
one that's been on my radar.
What was it called?
Survive, Kill, Vanish.
Survive.
She also wrote a biography about this Billy Wall, who was in Special Forces dating back to Korea, Vietnam, and this guy, and we're getting probably off topic.
No, it's fine.
He developed the halo jump
Really?
way back, and then did his last halo jump like into Cuba or something when he was 85 years old or something.
Oh my God.
It's incredible. So anyway,
insane.
that's what I've been on recently.
That's insane. So, okay, books. Do you have any habits that, people will listen to this, of course, for getting updates on NWA, but like we have a lot of successful people on here, and successful people have habits. Are there any habits that you feel have helped you with your success, either a morning routine or something you do every day? Is there something along those lines you would suggest for a listener listening, or Brian and I, that has helped you with your success?
I'm not necessarily a routine guy, but anybody that knows me that listens to this would say, oh yeah, I'm a schedule guy.
Okay.
Like I always joke, somebody says, what about, let's do this, April the 25th, 2028. And I go, no, I can't do that. I've got a haircut or whatever.
Yeah.
So, that's, that probably, and I probably go overboard with it because I'm not, I kind of tend to, if it's not, is it on the schedule? And if it's not, I'm not very good otherwise. But
right.
I think I guess not double book thing, not, those kind of things. So for me, it helps to have it.
Do you schedule your fun time?
Probably, yeah. Probably, it's probably all too much schedule.
I go golf this
I
day.
probably overdo the schedule. But I mean, I literally have, we usually play golf at Big Creek there in Mountain Home on Wednesdays, and it is on there every Wednesday, blocked out. But yeah.
Yeah, I'm with you. I have grown to live and die by my schedule. I'm booked. I have stuff scheduled out to the end of the next year too, 2026. So, do you schedule fun, but like personal development or anything like that? Do you have time blocks where it may not be a meeting with someone, but like this time every day I'm gonna try to think of ideas or knock out these calls? Or does that just
I would say so, and not just that kind of personal development relating to business. Also, just other. I've gotten into woodworking last year or two. Your grandson is 18 months old, so I've kind of gotten into that. So I'm like, I've got the schedule literally this weekend. Come up with new woodworking project, or whatever, those kind of.
What have you been doing with the woodworking so far?
Oh, and I'm very much an amateur, but just I made him one of those busy board houses for Christmas last year.
Oh, it's fun.
Then we bought one to have at our house in Fayetteville, and it's similar. And I told my wife, there's no telling what I've got in this thing I built, because I built the frame of it, but then bought all the pieces to put on it.
Yeah.
This is the most expensive busy board. I just should have bought one, but those type of things.
Yeah, that's great. That's great. Brian, do you have anything?
I guess just a piece of advice to an investor approaching a bank, whether it's Century Bank, the Ozarks, or any bank. What kind of advice do you give to investors approaching banks?
Well, I think one of you touched on it earlier too. Develop a relationship with the bank, and there's nothing wrong. And I know a lot of people do it, and I'm not saying I've not done it too. To just shop rates for the best rate. I would say that's not always the best option. You might get a better rate for this particular deal, but over time, you might lose out on a deal because you're shopping around, and like you said, somebody might just, and I've heard about this, somebody might just say, yeah, we'll do that for 6.5 or whatever.
Yeah.
And then you go get ready to do it, and they go, you know what? I ran that up the chain, and our bucket's full on that type of lending.
Yeah.
Well, these community banks really don't operate that way.
Yeah.
And if you develop a relationship with me or one of our lenders or Alex or somebody like that, that's not going to happen.
Yeah.
And so you might, the rate might not always be the bottom on the lending side.
Yeah.
But, I do think that quick turnaround, because you might lose a deal that might make a bunch of money on the back end, but you lost it because your shopping rates for that 3 basis points.
Yeah. Well, and as Windstone Private Lending, we had them on here. It's not always rate. Look at your fees, because really you got to look at it from like, what am I paying for this loan, not just what is the rate. Break down your fees on each thing. I mean, if you're 7.2 and the other person's 7, but your fees are less, I mean, it might be a much better deal at 7.2.
I think it's a common mistake for investors to get too fixated on a rate than anything else. Like, that's great. Yeah. Trying to get the best rate, but there's so many other factors, and just the loan leverage, terms, prepayment penalties, fees,
Schedule. Yeah.
And then just even outside the loan itself, the speed of execution. I mean, maybe you get held up on a closing and the bank has to move too slow, and you get pushed out of a sale. The seller needs to close at this date, but you're not able to do that because you were trying to.
You would have wished you would have paid that 3 basis points more, because it just made you $300,000.
Yeah.
So I 100% agree. That's really smart.
Well, and any of us, and it's not just banking. You go, you want to go to the grocery store. You think you can go to grocery store X, or you can go to Whole Foods. That's not the cheapest, but they may have, a different mix of products.
Yeah. That's a good way.
So it's
and convenience.
It's not convenience, all those things, and that's the thing that we can offer. I'm not saying we're the only one. We either can, or we are in the process of developing where we can do anything. We've got the online banking, we've got the app, we've got obviously debit cards, all those things that anybody, the largest banks have.
Yes.
So you can compete with them on those products. They can't do this other we're talking. That $50 billion bank cannot do what we're talking about doing.
Yeah.
But that is impossible for them. They have as much ability as anybody to do all the apps. They've got the products. They have all that, and they are unmatched with that.
And
if a lot of these community banks have got that either on par or close,
right,
this other relationship part, that
you're saying have the relationship and have some
you get both
modern luxuries. And
you get both
things.
Yeah.
I think you guys are a perfect blend of all of it. I really do.
Yeah, it's been great. I love the legacy. I love that. Arkansas legacy, growing the bank. Hiring the right people, having the relationship. A lot of good takeaways in this episode. So we really do appreciate you coming on today.
Yeah. Chris,
thank you for having me.
It was a pleasure, Chris. Thank you so much.
Thank you.
And thanks for listening in.
Thanks, guys.
This episode is brought to you by Windstone Private Lending, one of the top private and hard money lenders now serving Northwest Arkansas. Whether you need short-term capital for a flip, a bridge loan, or creative financing, they've got you covered with very flexible products to fit nearly any deal, including 100% financing. What sets them apart is their deep expertise, fast response times, and ability to think outside of the box to help investors like us close quickly and efficiently. If you're looking for a real lending partner, check out Windstone Private Lending. Link is in the show notes. Our next sponsor is Advantage Title and Escrow. They're a local company. They do great work. Specifically, Kayla Phillips. I can speak personally on this sponsor because I use Kayla for all of my transactions. It's been 2, 3, 4 years now, and Kayla and I have done a ton of deals. We probably do between 65 to 80 deals a year together, and they do a great job. The SOPs, so systems and processing that they have over Advantage Title, is just incredible. Clients love it. They do a great job from start to end communicating. When I give a deal to Advantage Title and Escrow, I know that it's going to be taken care of. There's no second guessing. I almost am able to treat them like a second transaction coordinator to my transaction coordinator that I already have. I know that they're going to handle the systems and processes correctly as an agent, as a homeowner, as a buyer or seller. They do an incredible job of handling a transaction and communicating throughout the process. They do a great job with communication, especially Kayla Phillips over there. I would highly encourage you, if you're looking to close on a home, buy a home, if you're an agent listening, to use Advantage Title and Escrow, specifically Kayla Phillips. So you're going to reach Kayla best at 501-358-1601, or you can email her, Kayla, Cayla, at goadvantagetitle.com. Advantage is ADVANTAGE title.com. Banks are about community, and Century Bank of the Ozarks has been your community bank for 131 years. That's over a century, since 1894. They've been helping neighbors build homes, grow businesses, and plan futures. Because they're locally owned, your loan approval happens here, not miles away. Visit their locations in Fayetteville and Mountain Home, Arkansas, as well as Gainesville, Theodosia, Bakersfield, and Ava, Missouri. Century Bank of the Ozarks, local bankers make local decisions since 1894. Member FDIC and equal housing lender. If you enjoyed the show, make sure to give us a follow on your favorite podcast platform so you never miss an update.
Don't forget to connect with us on Instagram, Facebook, and LinkedIn for more real estate insights and behind-the-scenes content.
Have a question you want us to cover? Send it our way. And if you're interested in sponsoring the show, visit nwainvesting.com to get in touch. Thanks for listening, and we'll see you next time.